Welcome to the Deep Dive. A special hello if you're joining us from Stock Explorers. Today we're taking a closer look at Terawulf, that's ticker WULF. They're playing a really interesting space, kind of where digital currency, specifically Bitcoin mining, meets the whole AI boom. We want to break down what they do, how they're doing it, and what their financial situation looks like for anyone considering them as an investment. We'll try to keep it clear, maybe use some examples to make sense of it all.
Exactly. And Terowolf has deliberately positioned themselves in these two, let's say, very dynamic areas. You've got the Bitcoin mining side, which folks might know a bit about, and then this move into providing high-performance computing or HPC infrastructure. That's the stuff AI really needs. While Bitcoin mining was their starting point, this shift towards, well, supporting AI is a pretty big deal for them.
Okay, let's dig into that dual approach then. So it's not just mining crypto. They're also looking to provide the infrastructure for AI development, like the picks and shovels idea. How do those two parts work together? Or maybe what are the benefits of doing both?
Well, the big one is diversification, right? Bitcoin has its market ups and downs, very volatile sometimes. AI infrastructure demand, on the other hand, is driven by different things and is, frankly, exploding right now. So, for instance, the cash they generate from selling the Bitcoin they mine, and they do sell it regularly, can be plowed back into building out more capacity for AI hosting. Think of it like using profits from one area to fuel growth in another, potentially faster growing one. Plus, their existing setup, particularly their access to a lot of power, is crucial for both energy-hungry Bitcoin mining and AI processing.
That makes sense, leveraging what they already have. Now, you mentioned something interesting earlier, their focus on sustainability in mining. That's not always top of mind with crypto, is it?
It really isn't, and that's a key point for Terawolf. They've made a very public commitment to use at least 90% zero carbon energy. We're talking hydropower, solar, nuclear, things like that. Just to give you some context, that's way higher than the typical energy mix for, say, the U.S. grid overall, and certainly higher than many other crypto miners.
Okay, 90% zero carbon. Is that just good PR, or are there tangible benefits there? Something an investor should actually care about?
Oh, there are definitely potential benefits. First off, renewable energy, especially hydro or nuclear in certain areas, can sometimes offer more stable, maybe even lower long-term electricity prices compared to volatile fossil fuels. That could mean lower, more predictable operating costs for Terawolf. And second, the whole ESG, environmental, social, governance angle is becoming huge for investors. Having that strong sustainability story could make them more attractive long-term, maybe even less vulnerable if carbon regulations tighten up down the line. So yeah, for you listening, it looks like more than just greenwashing. It could genuinely impact their bottom line and investor appeal.
Right, could be a real competitive edge. So focusing back on the Bitcoin mining itself, how big are they in that world? Are they a major player?
They're definitely up there. Recent figures place them among the larger publicly traded Bitcoin mining companies globally. So yes, a significant player. And they've clearly been focused on scaling up. Their hash rate, which is basically their total mining power, saw a huge jump year over year. I think towards the end of 2024, their self-mining capacity had almost doubled from the year before. That's serious expansion.
Doubled capacity, wow. And what do they do with the Bitcoin they mine? Some companies hold it right, hoping the price goes up.
Terawolf takes a slightly different approach there. They generally sell the Bitcoin they mine pretty much daily. The idea is to lock in the profit between their cost to mine and the current market price. It provides more consistent cash flow, you see, rather than betting heavily on future price appreciation. It's more about operational returns, less speculation.
Got it. Locking in profits daily. Makes sense for cash flow. What about the cost to mine that Bitcoin? It's definitely not free.
Not at all. They reported their average cost to mine one Bitcoin was around $40,000 in late 2024. But importantly, that cost did jump up later, hitting closer to, around $55,950 in Q3 2024. Several things caused that rise. Energy prices went up, which is always a big factor. And crucially, the Bitcoin halving event happened in April 2024. That cut the mining rewards in half overnight, essentially doubling the cost per coin if nothing else changed.
Okay, rising costs a key challenge there. But let's pivot to that other big piece, the strategic move into AI infrastructure. Sounds like a major shift.
It really is. It's clearly a core part of their strategy now, trying to capture some of that massive demand for AI computing power. The linchpin here is a big partnership they announced with a company called Core42. Core42 is part of G42, and they specialize in cloud and AI infrastructure, so a serious player in that space.
Right, Core42. And what does that deal actually involve? What is Terowolf providing?
Okay, so the agreement, which came out late last year, has Terawulf setting up over 70 megawatts of data center space specifically for Core 42. This is happening at their Lake Mariner facility in New York. It's going to be rolled out in stages through 2025. And importantly, it features advanced liquid-cooled GPU servers. That's high-end stuff needed for really intensive AI work. Liquid cooling is key for handling the heat from those powerful chips packed closely together.
Liquid cooling, yeah. That sounds advanced. And financially, what does this AI deal mean for Terawulf? Is it significant?
Oh, hugely significant. The projections for the data center leases with Core 42 are substantial. The initial 10-year contract is expected to bring in something like $1 billion in total revenue for Terawulf over that period. That's a massive new revenue stream. And crucially, it's likely to be much more stable and predictable than Bitcoin mining revenue, which can swing wildly with prices. It really puts this AI pivot into perspective, doesn't it?
Billion over 10 years. Okay, that definitely underscores the diversification point. Are they doing anything else in AI besides this big Core 42 deal?
Yes, they are. They've also developed some other smaller scale AI capabilities. There's a 2-megawatt facility they call the WULF Den, also using liquid cooling, which they apparently got up and running quite quickly inside an existing building. And they mentioned a larger 20-megawatt milestone facility that was also supposed to be operational around the end of 2024. So it seems the Core 42 deal is the anchor, but they're building broader capabilities in AI hosting too, likely seeing strong demand signals.
It sounds like having that existing infrastructure, especially the power, is a massive help here.
Absolutely critical. Having that owned, scalable infrastructure with up to 600 megawatts of power capacity gives them a real edge. It means they can pivot or scale relatively quickly between Bitcoin and AI as the market demands. And speaking of infrastructure, they also secured a very long-term lease extension at Lake Mariner, 35 years, plus an option for another 45. That expands their land area significantly and gives them room to grow potentially up to 750 milliW eventually. So they've got the power and the land for future growth. A solid foundation.
Okay, solid foundation built. Let's switch gears to the overall financials. How has Terawulf actually been performing? What's the bottom line look like?
Well, it's a bit of a mixed picture, but with positive signs. Revenue growth in 2024 was really strong, more than doubled compared to the year before. That was mostly driven by mining more Bitcoin and, higher Bitcoin prices during parts of that year. However, actually turning that revenue into profit has been a challenge. They've reported net losses recently. The fourth quarter of 2024, for instance, saw a net loss, which was actually wider than the previous quarter, and their earnings per share didn't quite meet analyst expectations.
Okay, so revenue booming but still losing money. Why is that? What's driving the losses?
Several things hitting their costs. The cost of revenue went up quite a bit. That's down to expanding their mining operations, more machines running, plus the Bitcoin network getting harder to mine on. That halving event we mentioned, cutting rewards, and rising power prices again. But on the positive side, their actual net profit margin, while still negative, did improve in 2024 compared to 2023. So maybe moving in the right direction towards profitability, even if costs are up.
Right. Improving margins is good. What about their balance sheet strength? Can they afford this big AI expansion? Do they have debt?
Their financial position looked pretty solid at the end of 2024. They had a decent chunk of cash. And a really key development, they completely paid off their term loan in 2024. So they basically eliminated all their outstanding debt. That's huge for financial flexibility. To actually fund the AI build-out, they raised capital by issuing convertible senior notes, a type of debt that can convert to stock later. And they've also bought back some of their own shares recently. So cleaning up the balance sheet seems to have been a priority. Eliminating debt like that frees up a lot of room to maneuver.
Paying off debt, raising capital, buying back shares. Lots happening financially. What are the analysts forecasting for them going forward, say for 2025?
Analysts have tweaked their forecasts a bit. They've become slightly more cautious, pulling back revenue estimates a little and still showing some concern about near-term profitability. But, and this is important, even with those adjustments, Terawulf is still projected to see really substantial revenue growth in 2025, way faster than the average company in their broader industry sector.
So still expecting strong top-line growth, even with some caution. Okay, let's talk about the stock itself. WULF, how has it been trading? What's the market feeling?
Well, volatility is the name of the game here, which isn't surprising for this sector, right? The stock price bounces around quite a bit, influenced by Bitcoin's price swings, obviously, but also by company news like that Core 42 deal and just general market sentiment. For example, there was a pretty big jump in the stock price just recently, in April 2025, came with high trading volume. And looking at options activity, it seemed pretty bullish. But, looking over a longer period, it's been mixed. It had fallen back from earlier highs before that recent pop. That surge definitely suggests the market liked something it heard recently.
And what are the Wall Street analysts saying? Buy, sell, hold. What's the consensus, if there is one?
It's generally leaning positive, though maybe not unanimous. Several analysts covering Terowolf have buy ratings out. Their price target suggests they see potential for the stock to go up from where it's trading now. But it's crucial to mention it's classified as a very high-risk stock. The daily price swings can be really significant. Investors need to be ready for that kind of ride. And interestingly, while statistically the stock doesn't always move perfectly in sync with Bitcoin day to day, big moves in Bitcoin do tend to impact Terowolf's stock price noticeably.
High risk, potential upside. Got it. Who actually owns the stock? Is it mostly retail investors or bigger institutions?
It's actually got significant institutional ownership. That means big firms, mutual funds, hedge funds, pension funds hold a large chunk of the shares. And the trend recently has been more institutions buying in than selling out, which usually indicates growing confidence from the professional money managers. Some of the big names holding shares include Vanguard, BlackRock, Geode Capital, major players. On top of that, the management team themselves own a decent amount of stock, which helps align their interests with shareholders, And their compensation often includes bonuses tied to hitting performance goals.
Okay, so the big firms and the insiders seem fairly aligned and invested. Summing up their strengths, what would you say are Terowolf's key competitive advantages?
I'd point to three main things. First, that heavy focus on zero-carbon energy. That's becoming a bigger deal, as we discussed, both for cost and reputation. Second, their vertically integrated model owning and operating their own facilities gives them more control and flexibility. And third, just the sheer scale of their own infrastructure and power capacity. That's a hard asset to replicate, especially with sustainable power sources.
Makes sense. But every company faces hurdles. What are the main challenges or risks investors should be aware of with Terowolf?
Definitely a few key ones. Those rising costs for Bitcoin mining we talked about, energy, having impact that puts pressure on margins. Then there's always regulatory uncertainty hanging over the whole crypto space. You never know what might change there. There's also execution risk with the big push into AI hosting. It's a new, very competitive field for them. Can they deliver effectively? And finally, despite the diversification, they're still tied to the ups and downs of Bitcoin's price to some extent. That volatility remains a factor.
Okay, risks noted. On the flip side, looking ahead, where are the biggest growth opportunities for them?
The most obvious one is the massive surging demand for AI compute power. If they can successfully leverage their infrastructure and power for that, the potential is huge. The scalability at Lake Mariner, with that long lease and expansion potential, gives them a concrete platform to capture that growth, both in AI and potentially further in Bitcoin mining, if it makes sense. And having cleared their debt and raised capital gives them the financial firepower, the flexibility to actually go after these opportunities aggressively.
Let's circle back to that AI expansion. How well does shifting focus towards high-performance computing really fit with the Bitcoin mining routes? Do they complement each other, or is it like running two separate businesses?
It's actually quite synergistic, I think. This dual model lets them be flexible. They can shift power allocation, maybe mine more Bitcoin when it's highly profitable, or dedicate more power to AI hosting when those contracts are strong. Both need reliable, large-scale power, which Terawulf is focused on providing sustainably. They can use the same core infrastructure, the land, the power connections, the cooling systems for both, which should save on costs compared to building completely separate operations. It really helps them evolve from just a miner into a broader digital infrastructure company.
And that Core 42 partnership is central to this AI strategy. Can you just recap the main benefits Terowolf gets from that specific deal?
Sure. It's multifaceted. Big one. Revenue diversification and stability from those long-term contracts. That's huge compared to mining volatility. 2, it gives them a major foothold in the booming AI and HPC markets, opening up a whole new customer base. 3, there's built-in scalability, options to expand capacity for Core 42 later, meaning more growth potential. 4, it leverages their key assets, the zero-carbon power and existing sites. 5, it boosts their credibility, partnering with a known AI player like Core 42. And finally, it just gives them more strategic options for the future.
You mentioned the advanced tech Core 42 is putting in Dell servers, liquid cooling. Can you give a bit more detail on what that infrastructure actually looks like?
Yeah, so Core 42 is using high-end Dell gear, specifically Dell PowerEdge servers packed with GPUs. Those are the powerful processors needed for AI. They're using scalable rack systems designed for density, and critically, these are liquid-cooled systems. That's essential to handle the intense heat generated by running so many GPUs hard for AI tasks. The whole setup is being deployed in phases, kind of matching the expected ramp-up in AI demand. And the data halls themselves are being custom-built by Terawulf to support this high power density, optimized airflow, all integrated with their zero-carbon power source. They're also tapping into partnerships with Dell and the wider Microsoft ecosystem.
Sounds like a very sophisticated setup. What's the expected impact on Terawolf's overall revenue growth from this Core 42 deal specifically?
It's expected to be transformative. That projected $1 billion plus over 10 years is a massive new recurring revenue stream. It should significantly boost their overall growth rate, maybe even accelerate it. And importantly, the margins from this kind of long-term hosting contract are likely to be more predictable and stable than Bitcoin mining margins. Plus, those expansion options mean the revenue could potentially grow even further beyond the initial commitment. It really positions them strongly in a super hot sector.
We keep coming back to the zero carbon energy. How exactly does that strategy hit their operational costs compared to miners using, say, mostly natural gas or coal power?
The primary benefit is potentially lower and maybe more importantly, more stable energy prices. Hydro, nuclear, even long-term solar contracts can offer more cost predictability than fossil fuel markets, which can swing wildly. This helps keep their Bitcoin production costs competitive. It also shields them somewhat from future carbon taxes or regulations that could hit miners relying on fossil fuels. And sometimes, being located near these large, stable power sources lets them participate in grid programs like demand response, which can actually generate extra revenue or provide power discounts. So multiple potential cost benefits there.
Okay, so it helps cost. How do they stack up overall in mining efficiency against the competition? Are they best in class, middle of the pack?
They're definitely competitive. Looking at metrics like their power cost per Bitcoin mined or their overall electricity rates, they generally compare favorably. Their hash rate growth has been strong, and they've been actively upgrading their mining machines, their fleet, to newer, more efficient models. Utilization rates, meaning how much their machines are actually running, are also typically high. Now, are they the absolute lowest cost producer in the world? Maybe not. Some miners might have access to uniquely cheap power or got the very, very latest generation of machines first. But Terawolf's combination of pretty low-cost zero-carbon power, ongoing efficiency upgrades, and participation in those grid programs makes them a very solid and efficient operator in the mining space.
Right, competitive, if not maybe the absolute leader on every single metric. So pulling it all together, what are their main strategies right now to try and maximize profitability overall?
It's really a combination of things. First, continuing to leverage that low-cost, zero-carbon power base. That's fundamental. Second, relentlessly upgrading their miner fleet for better efficiency, getting more hash per watt. Third, that big strategic push into AI and HPC hosting, chasing those potentially higher and more stable margins. Fourth, just optimizing everything, tuning machines, managing operations tightly. Fifth, smart financial management, keeping debt low, allocating capital wisely. Sixth, actively participating in those demand response grid programs for extra income or savings. And seventh, building strategic partnerships like the Core 42 deal to expand their reach and capabilities. It's a multi-pronged approach.
That 35-year lease extension at Lake Mariner sounds like a huge commitment. What are the big takeaways from that deal for the company and its investors?
It's really about securing the foundation for long-term growth. 35 years, plus that option, provides enormous stability and runway. It means they can confidently plan and invest in major infrastructure expansions for both Bitcoin and AI HPC over decades. It gives them financial predictability on land costs. It strongly signals their commitment to being a major player in AI and HPC infrastructure, which helps attract those kinds of long-term, high-value customers. And the way the deal was structured might also be seen positively from a corporate governance perspective. It really solidifies their main site as a core long-term asset and enhances their competitive position.
Okay, last question on this synergy point. How does focusing more on AI and HPC actually help their original Bitcoin mining business? Wouldn't it just pull resources away?
You might think so, but there are real crossover benefits. Building infrastructure for demanding AI clients' advanced cooling, high-efficiency power delivery often raises the bar for all operations at the site, potentially making mining more efficient too. The push for AI might accelerate upgrades to their power infrastructure or network, benefiting miners. It forces them to be really good at managing large-scale, flexible energy use, which helps optimize power costs for mining as well. Having that stable AI hosting revenue provides a financial cushion, which can help them weather downturns in the Bitcoin market and continue investing in mining upgrades even when times are tough. And finally, being a player in both spaces might attract different kinds of partners or capital that could benefit both sides of the house. So it can actually strengthen the mining side too.
Okay, this has been a really thorough look at Terawulf. Clearly a company trying to navigate that interesting space between Bitcoin mining and the AI boom with that strong sustainability angle as a differentiator. So for you listening, the key things to weigh seem to be that dual revenue potential, the big strategic bet on AI infrastructure, their improving financial health but ongoing profitability challenges, and those competitive advantages around power and infrastructure, balanced against the risks in these volatile markets. As always, this isn't investment advice. Please do your own homework, consider your own goals and how much risk you're comfortable with.
Yeah, and maybe a final thought to leave you with. As everything digital keeps evolving so fast, companies like Terawolf, the ones trying to bridge established tech like mining with exploding areas like AI and doing it with an eye on sustainability, they represent a really interesting, maybe crucial part of the landscape to watch. Definitely worth keeping an eye on how they execute.